Okay, so last but not least is, well, what is our strategy for the time being? So
I think overall, when we look in the next 2 quarters, there are a lot of signs that the market is cooling down, basically. And when I say I don't mean the stock market, I mean the economy itself. So we can see retail spending is already, not to say peaking, but it's stagnating. And then there are pockets that are doing well, but overall, the mood is pretty much down. And it's not just in Malaysia, but when we look abroad as well, apart from the things that we've been talking and repeating many times, like the 10-2, we see, Meta going through a hiring freeze. I think because AI is so hot, right? So when you look at, once you start to see signs like that, time to pay attention. So I would expect the next, the second half of this year to not be as good. And I think Q1 next year will be definitely challenging. So for me personally, on my Malaysia side, there's still some cash around, but I think for my foreign portfolio, there's a lot more cash. And the reason is because there needs to be a cooling period. Now, whether that becomes a crash or big correction, I wouldn't know. But good times always follow bad times, always follow good times. So this year is a good time for a lot of US investors, not really a good time for Malaysian investors. So intuitively, like a very simple sort of way of thinking, it's not simplistic, but it's based on history. We can expect Malaysia should beat expectations next year versus the US.
Yep, exactly.
Like could extend, right? The current trajectory could extend next year. So that's what investing is about. It's you always work on incomplete information.